I guess we all are aware of the spectacular rise of private equity. We all are witnesses to their growing empire. We can see how they are buying every company left to right. Their connections and names are everywhere. But do you know what they actually do? Why are they so much in demand? Do not worry, because we have cracked the code on private equity. Watch this video till the end to know how it works and if their growth has a ticking time bomb. Before dwelling deep into them, let us first see what exactly is private equity. So, private equity falls under the category of investment management company. But instead of buying stocks in the stock market, these investment groups pool money to buy entire companies. After helping the company grow and improve, they sell it again to make a bigger profit. But how is it connected to us? How these private equities are affecting normal populations? Well, if you are not aware, these private equities are the reason for the mass layoffs and unemployment. Let me show you how. The companies that private equity buys, they want to grow, and their goal is to obtain maximum profit. For them, the maximum profit is through cost cutting. They analyze a company's operations to find areas where money is being spent without any return. This can be anything from office supplies to even employees. Mostly, they want to remove the workforce like layoffs, and sometimes they just freeze the hiring. As we all know, they work in mass and own most of the company. Its impact gets bigger. However, they do not directly affect the layoffs, but in some way, they do. However, some reasons show that the collapse of these private equities is near. But this does not mean normal people will benefit from it. They will have to pay the consequences for their rise and fall. First, let us look at why I feel the private equities collapse is near. Reason number 1, overheated valuation. Overheated valuation points out a situation where the price of a certain thing is paid more than its actual worth. We can say it is closer to inflation. This affects private equity the same way it affects normal people. Private equity overpays for companies, which makes it harder for them to get a good return on investment. Even if achieving ROI is not an issue, the market is. Now, for instance, if after buying a company the market weakens and the interest rates increase, then the investment's worth can drop down very easily. This can also lead to heavy losses for private equity. Reason number 2, debt dependence. Most of the private equities are dependent on loans or debts. This makes it less stable and more risky. If the economy dips or the interest rates go up, this can make their whole structure dissolve. Reason number 3, not a suitable choice for long-term investors. Every company and its long-time investors now know that these private equities only hold any property for a short period and then sell off for property. Their lack of commitment and loyalty is always in question. And loyalty is always in question. This makes them untrustworthy. Hence, they are not the first choice for any long-term investor. Reason number 4, not good for long-term. Companies that are bought by private equities are slowly exploited by them. In order to get instant good results and profit, they tend to forget the company's future. They prioritize short-term success over long-term success. This orientation can and will hurt the company's future performance. Reason number 5, increased government regulations. If a company is bought by a private equity, it gets more popular. It gets in the sight of the government, which might increase scrutiny and create a hindrance to its free growth. Although this private equity has a lot of weak spots, that does not mean that it does not have stronger aspects. There are reasons why these equities are still afloat. For me to decide if these private equities will collapse, I need to weigh down both aspects. So, let us look at reasons why they can still survive. Reason number 1, strong investor appeal. Private equity is a favorite among investors. They tend to favor investment in private entities more because A. Unlike many investments where investors just invest out their money and watch others manage things, in private equity, after investing their money, investors can actively participate in its management. Investors can provide the company with their opinions, help make decisions, and can also provide resources. B. They provide diversification in the investment. Private equity allows investors to browse through the offers that are not available to the public. This can not only diversify the investor's domain, but also minimize the competition and crowd and make it a good source for return on investment. Reason number 2, performance. Despite all the market fluctuations, private equity has historically given the best returns. Their profitable track attracts new investors and keep the party going. This industry has also shown its inclination towards adaptability in times of need. Unlike many investments in private equity, investors adjust their investment strategies and target different sectors. Private equity, after buying companies, works on improving its operational efficiency and improve strategic directions, which may not just bring some short-term profit, but also work up the company for a better future. Some might think that in order to get fast results, private equities ruin the future of the company. And this is true in some cases. But mostly, the changes brought up by the equities tend to help the company in the long term. This benefits the private equity investors as well as the company. Reason number 3, economical benefits. Although it always seems like the layoffs are somehow intertwined with private equity, however, this is not the only case. In some cases, private equity investment can lead to new job openings through the company's growth and expansion. This not only benefits the company, but also the normal population. Sometimes, while looking for a way to develop a company, private equity investors help the company in its research and development. These sometimes come up with entirely new services or products. Hence, they directly or indirectly help in innovations. Not only this, private equity investors also contribute to overall economic growth. They help grow and expand companies, and this growth goes way farther than just the company. By looking at both aspects, I feel like with the change in the market and fluctuations, the private equity might collapse. However, it will not be happening anytime soon, but we all know it is inevitable. But how the collapse of private equity will affect the normal population? Will they benefit or not? Like always, whatever change happens in the market, the general population is always affected the most. However, its collapse will affect the population in a complex way. There will be benefits, but there will be losses as well. Let us take a look. Benefits. 1. Due to private equity, the company does not treat their employees well. They focus on the profit on the cost of workers. This will stop with the collapse of private equity. 2. The cost-cutting policy of these investment firms often kicks out employees, making them jobless. With the fall of private equity, hopefully this will stop as well. 3. Private equity gets so much involved in making money that they ignore customers and do not make them a priority. This issue will resolve on its own if it collapses. Loss. 1. When private equity expands or grows a company, it opens up new job requirements. With them gone, it will reduce those job openings. 2. The private equity investments help new business grow. Without them, it will become harder for new business to launch. 3. If there is a collapse in private equity investments, there will be a crash in the market. It will impact everyone's savings and investments. 4. We all know how private equity grow or help boost overall economy. With their collapse, the growth of economy will get affected. What are your thoughts on this shift in the dynamics of companies? Do you think these private equities will collapse? Who do you think can replace them? Let us know in the comments below. If you liked the video, do let us know by dropping a like. Also, hit the subscribe button if you want to make sure you get all such videos.